All right, boom, let's do this. Welcome to Money Talks. I'm your host, Bill Barhydt. Our goal with Money Talks is to make the crypto economy accessible, easier to understand, and maybe a little fun. So normally we focus on retail and what it means to folks like us, individuals who want to invest in Bitcoin and the crypto economy. Today, we're going to have a little bit of a different focus. Today, I want to talk more about institutional adoption of Bitcoin and crypto. And as you can see in the image here, we'll bring up in a second here, there's a few companies that have had kind of an outsized impact on Bitcoin in particular with their holdings. Probably the best known brand that's holding Bitcoin would be Tesla. Who made waves earlier this year when Elon Musk first announced that they were buying Bitcoin, but then also announced that they were going to sell 10% of it. Turns out that it was actually very clever on their part because they wanted to make sure that they could sell it in a pinch, and it was kind of a liquidity test. And they're still holding the 90% that they've purchased so far. It sounded like they intend to purchase more, but we haven't heard anything since. But by far the largest purchaser and holder of Bitcoin as a public company is MicroStrategy. And we'll be joined in a couple of minutes by the founder and CEO of MicroStrategy, Michael Saylor. And let me just give you a little bit of background on our research on Michael's absolute genius. If you've ever heard him speak, I'm sure most of you have. If you're involved in crypto, it's kind of hard not to. Mike's he's an MIT, I believe, aerospace engineer, had dibs on trying to become a pilot, and ultimately, luckily for us, went into the software business instead, and went through just a huge boom cycle with MicroStrategy in the 90s, and was one of the most prolific IPOs during that original internet era, .com era. I remember it vividly. So there's so many things I could tell you that I've read and heard about Michael, but maybe we're better off just kind of getting into it directly ourselves. So without further ado, let me bring Michael on to join us. Good afternoon, and I believe you're in Miami. Welcome.
And Bill, thanks for having me.
How you doing?
I'm awesome.
Good.
Doing great.
Yeah. China news aside, the umpteenth ban of Bitcoin, at least for today. Maybe they'll ban it again today. Have they ever done twice in one day? I don't know.
I think it's good marketing, Bill. Like if you think about it, you've got pronouncements. The president of Turkey says stuff about Bitcoin. People are asking the premier of Russia whether they'll accept Bitcoin. People want to know from central bankers what they think about Bitcoin. When's the last time somebody asked a government their opinion of Apple stock, right, or whether you should invest in the Vanguard 500 index, or whether you should invest in gold or silver or any other stock or options trading, or whether you should put your money in a money market? Nobody cares about any of those things. The only thing they care about is Bitcoin. Bitcoin is sucking the oxygen out of the room. And good news is good news, and bad news is good news. And as long as you keep talking about it, it's a good thing. So now you have the entire government, in essence, saying it's just so good, we're a little bit afraid of it. And then you have people like the Ray Dalio saying, yeah, well, what's your problem with it? Well, it's just so perfect that I'm sure that somebody will want to stop it or ban it because it's too perfect. Yeah. I mean, really, that's the problem, that it's just too good that people are afraid of it. I think it's good advertising.
Do you tell your marketing team at MicroStrategy that no press is bad press?
No press? I've tweeted it.
Okay.
I think P.T. Barnum said it once. He said all publicity is good publicity. But certainly, right, I think for Bitcoin, I really do believe that the more people talk about it, the better it is. You can't buy this kind of publicity, right? Name one awesome other's investable asset that is getting this news cycle. No, right now, it's dominating the mainstream media. It's dominating television. It's dominating everybody's concerns. Is there a politician in the world that isn't aware of it?
Yeah. All
Okay,
right.
so here's the thing. Like when I was young, I used to hate the short sellers. Oh, they're shorting my stock. But the truth is, someone that shorts your stock has to buy it back in the future. So if someone talks about Bitcoin and they say they like it, then that's good. But if they talk about Bitcoin and they have an issue, then there's only two things you can do, right? You can either buy it or you cannot buy it. And so if 100 billion times people mention it and half the time they agree with the person that said whatever they said, okay, well, then they didn't buy it, but that's the status quo. The other half of the time, the status quo is changing. So I think that this is really just elevating the brand.
So I have a whole bunch of things I want to talk about. So let's get through it one at a time. The first question I got to ask you, all right, right at the top of your Twitter feed, which has 1.5 million followers now, I'm going to guess it was a lot less 18 months ago. Bitcoin is a swarm of cyber hornets serving the goddess of wisdom, feeding on the fire of truth, exponentially growing ever smarter, faster, and stronger behind a wall of encrypted energy. So now for those of us who don't have degrees from MIT, can you explain what that means?
Sure. Well, so one thing I realize about Bitcoin is it's a totally decentralized network, and people and companies and entities are joining it. So I got the metaphor for the swarm of cyber hornets when I listened to the whine of Bitcoin miners. When you hear them, they scream. If you've ever been in a Bitcoin mining facility, it makes you think about a swarm of hornets. But the truth of the matter is, some people thought, oh, it's the Bitcoin miners. Well, yeah, there's hundreds and hundreds, if not thousands, of Bitcoin miners. I mean, there's 1 million, 2 million Bitcoin mining rigs out there, right? Mm-hmm. So there's a million plus hornets in the Bitcoin mining world, and they're all converting electrical energy into digital energy. And so that's part of it. But the other part of it is all the cyber hornets on Twitter. They thought it meant them, right? It's like all the people on Twitter talking about Bitcoin, and it sort of did, but it didn't exclusively mean them. It also means that this morning when I got up, I turned on the television and someone in China is saying something, and already 20,000 people had said something else about it. And then Anthony Scaramucci is on TV and he's talking about it on CNBC. And I thought Scaramucci is a hornet, right? And then I heard Andrew Sorkin saying, so Bitcoin is visibly decentralized, but I'm not sure about the other coins. And Scaramucci saying, well, that's what a Bitcoin maximalist would say. And I'm thinking, Andrew's promoting Bitcoin, Scaramucci's promoting Bitcoin. Yesterday, Jack Mallers was on CNBC talking about Bitcoin. Every journalist, every influencer, how many CEOs of Bitcoin are there? You're promoting Bitcoin. I'm promoting Bitcoin. Jack Dorsey's talking about Bitcoin. Thousands and thousands of CEOs. So every company on earth, every government on earth, every Bitcoin miner, every Bitcoin exchange, it's a swarm creature, and it's only growing stronger because people keep joining the network, and every single one of them that joins the network makes the network stronger.
So let's talk for a second about somebody who's, and thanks for the explanation. Let's talk for a second about somebody who's not promoting Bitcoin. I don't know if you heard on Peter Schiff's, Peter McCormick's What Bitcoin Did. He had Peter Schiff on a couple of weeks ago, and he was debating somebody, and I forget the gentleman's name. He actually was very smart. Peter Schiff didn't really budge.
Greg Foss, maybe?
Yeah, that was it. Greg Foss. Did you hear the interview?
Okay, so first of all, I think that Peter Schiff is one of the Bitcoiners. He's supporting Bitcoin too. All he does is talk about Bitcoin.
Well, okay.
Foss is another one. They're all talking about Bitcoin, right? Even when you're saying something negative about Bitcoin, you're supporting Bitcoin. Steve Hanke is supporting Bitcoin. They're all marketing Bitcoin when they don't market Bitcoin, when they think they're hating it, they're loving it. And when they're
but let's make it useful for the boomers listening who want to respond to the gold bugs, which I don't think they did a great job of in the podcast, right? He's just hasn't moved his needle, right? He may be supporting it because he talks about it, but under the PR discussion we just had, but how do you respond to the gold bug who really is entrenched and says this is going to zero?
I mean, every paradigm shift, you've got people in the old guard that they just will never accept the new thing. You know, Albert Einstein, who is of course one of the geniuses of our world, never accepted quantum uncertainty. God does not play dice with the universe. Sometimes people cannot be persuaded of these things. There are people that could not be persuaded. When the airplane was invented, there are a lot of people that had never flown in an airplane and they were unwilling to fly in an airplane for the rest of their life. You know, some people didn't want to give up their horses. Some people don't, you know, my father doesn't use a computer routinely. Yeah. I think the first iPhone my father used was like the iPhone 11 or the iPhone 12. He skipped the first 10 generations. So it's, I mean, people just sometimes don't embrace new technology.
Yeah.
You know, when you and I are, if we're still in this business 30 years from now, someone's probably going to come up with a new technology that we have a hard time getting our hands around.
That's going to be a sad day for me. I'm usually the first to buy anything if you can't sell it. So, so how does, getting back to the institutional question for a second.
Yeah.
MicroStrategy sells enterprise software, right?
Right.
You're taking the profits from that for the most part, and you're putting them into Bitcoin is my simple understanding of what's happening. And you're also leveraging the company by borrowing money on via bond issuance to also buy Bitcoin. Is that accurate?
Yeah. I mean, the right way to think about us is we're like a fiat miner. We're a synthetic Bitcoin miner. We have a software business that generates large cash flows, and so we convert those cash flows into Bitcoin as we generate them. But we also issue debt, and we convert the debt into Bitcoin. And then sometimes we issue equity, and we convert the equity into Bitcoin. So we do all that because we think that Bitcoin is the best property in the world. And if we can raise capital cheaply and invest in something that we believe will be accretive to our shareholders, we do that.
And I think you put up a tweet recently or last week that said you think you're holding over 110,000. The public number is like
114,000, more than 114,000.
Yeah, and I think outside of DCG, which really isn't a public company, I think that makes MicroStrategy the largest public company holder of Bitcoin today, is my understanding. And does that create, from an institutional perspective, issues with, you know, accounting rules, securities rules, headaches that, you know, that we don't know about? I mean,
yeah. So if you're a public company, and you're going to acquire property, you can acquire as much property as you want. So I could buy billions and billions of dollars worth of timberland or land or buildings. And I do that as an operating company. Bitcoin is property.
mm-hmm.
So there's no limit to the amount of Bitcoin you can acquire. Now, if I were to acquire the Bitcoin in a fund, if I were to go buy GBTC or I were to buy a mutual fund, I wouldn't be buying property, I'd be buying a security. And so there is a distinction between owning property, Bitcoin is a commodity equals property, versus owning a security. If more than 40% of your tangible assets are securities, I think you trip the SEC 40 Act, and then you're a financial company and you have a whole different set of regulatory requirements. So owning the property versus the security was one of the constraints or the nuances we had to consider. The other nuance, it doesn't give us problems, but it might give other companies problems, is the accounting for Bitcoin as property has traditionally been and is now indefinite intangible.
Right.
Which means that if you buy $1 billion of it and the price trades down by 50% over the weekend, and then it trades up by a factor of 10, you could have, in theory, $10 billion of Bitcoin, but you would be showing on your balance sheet $500 million of assets. And in theory, you could have a $9 billion investment gain, but you would be showing a $500 million operating loss.
Right.
Okay, so this is odd and it's confusing.
Right.
We have to provide a set of pro formas on our P&Ls and our balance sheets to explain to people what that means. And of course, since our shareholders are generally long Bitcoin and we're substantially a Bitcoin company, right? A large part of our market cap is Bitcoin. That's not really a problem for us. But it would be a problem for a company like Nike if you're Apple Computer or Nike or Facebook, and if you had a pristine P&L and a pristine balance sheet, then if you were to buy a bunch of Bitcoin and it traded down, you would actually have an operating loss in the quarter, which is indistinguishable from having lost money selling tennis shoes or having lost money selling advertisement. So if you're a conservative CFO or a conservative board of directors, you would think you would be afraid of the volatility of Bitcoin. But to be clear, you're not afraid of the economic volatility. You're afraid of the accounting volatility.
So, but that's a big issue. How do we get, I'm sure you talk
issue.
to other public company, either CFOs or CEOs all the time, and you don't have to disclose, but how do we get them over that hump given this, maybe it's surmountable. Maybe the FASB changes the accounting rules, but I don't have any visibility into them doing that. So
yeah, well, so that was the news this week, Bill, that on Wednesday, we closed the window on submitting letters to the Financial Accounting Standards Board. And a lot of letters got submitted, I think more than 100 by big companies, by big institutional investors, by other regulators, by other analysts. So we have been part of the vanguard in leading that charge to put this in front of FASB. And I'm cautiously optimistic. I think in time that'll be addressed. I mean, I don't see anybody in the marketplace saying it isn't a good idea to go from indefinite intangible accounting to fair market accounting. And so I think that's a catalyst over time. And in the meantime, I think the most important thing is just to educate people. I think the workaround, the result is two things. If you're a public company and you want to protect your P&L and your balance sheet, you would buy Bitcoin as a security by purchasing. You could buy GBTC. You could buy a fund, a Bitcoin fund, or a mutual fund that owns Bitcoin for that exposure. And that's one way to do it, because then it gets accounted for as a security with fair value accounting. The other approach is you just buy a small amount. Like I think, Square's initial purchase was, they bought 1% of their balance sheet. If it's a 1, 2, 3, 5%, then it wouldn't be material. And so you could do that. I think you could do the Tesla approach. I mean, Tesla's, obviously known for being more decisive as a company than many other companies. But even there, if you look at my tweet, what I said was, you ought to buy $10 billion of this stuff and then buy another $10 billion. You'll make 100 billion, then you'll make $1 trillion, right?
Right.
The Michael Saylor approach would be go hard, right? And go for the billion, go for the $1 trillion, because why not?
Right. Well, you're not a dollar cost averaging guy, I guess.
I'm not a dollar cost averaging guy. My view is you have a chance to turn $1 billion into 10 billion. And if I had $1 billion, I could turn it into 10 million, I would. But if you're a bit more conservative, and you're going to take a 5% position or 2% position, then you wouldn't do that. I think, ultimately, why wouldn't you buy the security? Because if you buy the security, you don't have title to the underlying property. So you cannot move it between 100,000 counterparties with no taxable event. Mm-hmm. And I think it's useful to be able to move $1 billion without paying tax on it, right? It's an obvious thing for security reasons. And also, you just don't want to pay the tax when you move it from counterparty to counterparty. So let me ask you about that. I don't think that's good. But the summary is people are moving into it, Bill. I mean, 35, 40 publicly traded companies will have Bitcoin on their balance sheet by the end of the year. And that's up from 0 a year and a half ago. So we're making progress, but we'll make much faster progress when the accounting gets fixed.
Okay, that was my next question. Do you think that there are Fortune 100 CFOs waiting right now with their finger on the buy button for this issue to be resolved?
I've heard through back channels that there are a lot of very large companies that would make larger investments were it not for the accounting.
Fair market. Okay. And so the recommendation
let me be clear. The number one impediment to a publicly traded company buying billions of dollars of Bitcoin is the accounting.
Yeah. And the proposal is go to a fair market model where you can mark to market as you would with any other tangible, And that solves the problem. And that's my layman's explanation, but that's more or less the
Yes.
recommendation.
Just
Okay.
give it the same. If Warren Buffett buys $10 billion worth of Apple stock, if he was told he could only write it down and never write it up, he probably wouldn't have bought it, right?
Yep.
So just give it a fair accounting treatment that's fair value, or it's comparable or at parity with other assets that you could buy.
Yep. Is there a scenario
Yeah.
that you can think of in the next
Can I make one more point, Bill?
Yeah, go ahead.
It's
Go
an
ahead.
important point. Bitcoin with fair value accounting would be actually superior as an asset on a balance sheet to owning Apple stock or owning any kind of stock, because the stock is still a security.
Mm-hmm.
And the security still trips that 40% limit.
Right.
Whereas if you own property, it would put it at parity more with like treasury bonds. I
Mhm.
could have 100% of my balance sheet in treasury bonds, right? I couldn't have 100% of my balance sheet in securities.
Right. Or you just become a broker dealer or an RIA or something like that as in addition to a public company, right? Which
Doesn't work for an operating company. They couldn't do that.
Right. Right. Okay. Got it. Is there a scenario that you can imagine, even with a 0.1% chance of happening, where you would actually start selling Bitcoin in the next year or 2 years?
No, look, Bitcoin is the most stable, highest value property in the world right now, right? So trading Bitcoin for something else is trading from the apex property, the best property, to an inferior property. So I can imagine scenarios where I borrowed against billions of dollars of Bitcoin to buy some other property that I wanted. There are other good properties, right?
Mhm.
There are other things, right? I won't dispute that owning the stock of a great company is not a good thing. I would just say that there's no better thing than owning pure digital energy on the dominant crypto asset network. So I wouldn't sell it, because that implies you're trading something for something better. Well, there is nothing better. So I wouldn't do that.
Yeah. And are you I think you're the largest shareholder of MicroStrategy still, is that?
I am. I'm the principal shareholder, and I'm the controlling shareholder.
Yeah.
I have more than 50% of the voting share.
And so nevertheless, are there people like on your board as a public company that, take convincing that of what you're saying, or is it more or less obvious to everyone?
We spent a lot of time getting educated on the issue before we bought our first Bitcoin, right? That was an in-depth process of education. We consulted with experts. We studied, we read the books, we considered the accounting implications, we considered the legal implications, we considered the business implications, we considered the securities implications. And then, every week since then, we have considered every development in the market and how we feel about it. So I think the board takes this very seriously, but clearly it's not like you would buy billions of dollars of this and then ask the question to the board, what do you think, right? Right. This is a strategy of the company. It's disclosed in our 10K. We have two principal strategies. One strategy is to acquire and hold Bitcoin, right? So in a publicly traded company, you would have consensus on the board before you did something like that. And that only comes with extensive due diligence.
How has that part of this disclosed strategy affected the core product strategy, if at all, of the company?
It's been good. It's actually improved the core business. The best way to understand our company is we were a $500 million enterprise software company growing 0% a year before we started this. And we had $500 million in treasury, cash and credit, generating 0% interest. So we were zero growth and zero interest. When we adopted the Bitcoin strategy, we're now a $5 billion treasury that's growing at the rate of Bitcoin, which traditionally was 130%, but you fill in the blank, right? So a high growth $5 billion company. And then the $500 million enterprise software company has been growing between 10 and 13% a year on average for the last few quarters. So we're now growing the core business north of 10%, and we're growing the balance sheet business much more aggressively. Now, the core business benefited because our brand was enhanced by a factor of 100. Employee retention was improved. Recruiting got easier. Sales got easier. There's a halo effect. Morale improved. And of course, we've also just been working hard on the core business to improve the product. The product's better, the services are better. We digitally transformed the way we sell and service and deliver our value proposition. So all of those things are working on our advantage too.
Yeah. So before we got on, I want to, this is awesome. Congrats. I'm not sure you would have expected that halo effect on the core business, but I'm sure you'll take it. And so let's just jump in the interest of time to our probably our least favorite topic, which is regulation. So before we got on, we were trying to guess how often China bans Bitcoin, and it seems like they're on ban number 4,500,734. Does this matter? How should people think
I don't
about
think
banning
China matters. Like I was an early shareholder of Facebook. I was an early shareholder of Twitter. I was an early shareholder of Google. If you had dumped the shares of Google, Facebook, and Twitter in 2010 because you heard that China was going to ban it, you would have lost
a lot of money. Yeah.
Obscene amounts of money. Trillions of dollars have been made on technologies banned by China. So I think that what China does is largely irrelevant here. And of course, it's kind of getting to be laughable because like every quarter for the past 5, 6, 7 years, there's been a China banning thing. So I don't really think that's that relevant. I think with regard to Bitcoin, if you wouldn't hold it for a decade, you shouldn't hold it for 10 minutes. So I think these things aren't good for speculators. I don't think you should, but I don't think you should be a speculator if you're a normal person. If you're a trader, maybe traders love it or hate it. I don't know, but you shouldn't be a trader. You're either an investor or you're a saver. If you're a saver, you're swapping a weak currency or a weak property for a strong property and a strong currency. And that's one way to view Bitcoin macroeconomically, moving toward the strong apex property. And if you're a technologist, you're buying the dominant digital monetary network with this view that one day, 8 billion people will be swapping energy via mobile phones with 100 million companies at the speed of light, subject to Moore's law, with computer programs thinking very fast. So you would buy it because you believe in digital property, digital energy, digital money, right? And you believe in the philosophy of an anti-inflationary asset. And if that's the reason you're doing it, then it doesn't really matter what happens day by day, week by week, month by month. Ask me again in like 4 years and I'll give you an interim check.
Right. But what about the US perspective? So now I listen to a lot of people in the current administration. I won't pick on any names. My impression is that if a few of them had a magic wand and they could make this topic disappear, meaning make Bitcoin disappear, they might actually do it. Now, luckily, our system doesn't allow for that, but I think that's what they believe.
I don't see that at all. Actually, I think that some of the altcoiners spread that kind of message, but I actually think if you look at every statement by a central banker or by regulators, they're pretty clear. Bitcoin is property. Bitcoin is a commodity. I'll give you the exact quote. Bitcoin is a digital, scarce, speculative store of value, unquote. If you took away the word speculative and you said Bitcoin is a digital, scarce store of value, right? Then that suggests that all $500 trillion in the world should be converted to Bitcoin overnight. So you have to add the word speculative in order to actually create any competition at all. And I don't think there's any debate. I mean, Christina Lagarde has said that. Jerome Powell has said that. Gary Gensler has said that. I think Janet Yellen has said that. I think the people in Congress and the Senate have said that. Right. So I haven't seen any regulator actually debate that Bitcoin is a digital store of value. And so it's speculative. That means be careful and think about it when you buy it. No one's talking about taking away your ability to hold digital property, not in Western Europe, not in the United States. I think all the regulatory FUD is around, is it okay for me to not pay taxes if I sell $1 billion of Bitcoin with a $900 million tax gain? No. Is it okay for me to transfer $1 billion to someone and not disclose it and not pay taxes on it? No. Right? I mean, can I issue $1 billion of yo-yo coin, to my friends and call it a currency and a token and a commodity and not file a regulatory disclosure on who owns it? And the answer is no. Right. So,
Mhm.
so I think that that the regulations coming to securities and it's regulation related to, are you abiding by securities laws? Are you abiding by tax laws? And that kind of compliance will continue. But digital property in the form of Bitcoin isn't really disputed by anybody. If you looked at the Senate hearings they had last week, there was broad-based consensus. Every single senator, their body language and what they said indicated that they're supportive of Bitcoin and the crypto industry in general. Everybody just wants it to be regulated appropriately. And I think the regulators have agreed. So I'm not really concerned about that. I think that the narratives in the FUD are spread by traders and speculators, and it'll be worked out.
So we have by my count, upwards of 175 currencies in the world today. What do you think happens to those currencies 25 years from now?
I think to be a shakeout. I mean, I think that you'll see the bottom 150 disappear.
Really? In 25 years?
I think there's a shakeout in the cryptocurrencies, right?
Sure.
I think when Gensler pointed out that of 6,000 currencies, they're not all going to last, people were up in arms. But the truth is, if you believe that the bottom 150 currencies or 100 currencies are going to disappear, why wouldn't you think that the bottom 4,000 or 5,000 cryptocurrencies are also going to disappear?
Sure.
But
that's a very different statement than saying 150 world currency or sovereign currencies will disappear, right?
The world doesn't need the weak ones, right? The world needs the US dollar. It's clear that the RMB is going to last. The dollar is going to last. A currency issued by a strong country that's decently managed will last. I mean, it's common for people to criticize inflation in the dollar, but you should keep in mind that inflation in the dollar is nothing compared to inflation in the Bolivar, right? So the Venezuelan currencies disappeared. The El Salvador currency disappeared many years ago, right? Currencies in Lebanon and Syria, the Lebanese currency had, a 90% collapse in 12 months. So I think that those currencies are disappearing. Where's the Afghan currency? That's gone. That's been gone, right?
Right.
So I think it goes without saying that the weak currencies will go away. The world doesn't need all those currencies. The world just needs a few. And the few it needs the dollar. People would prefer to buy things with the dollar in Argentina, Venezuela, Nigeria, and Syria and Lebanon and Afghanistan, right? If they could, they would do that in a heartbeat. And in many cases they are. So the world needs that. The world doesn't need the weak currencies, and the world's going to need the CNY, because as long as China controls its own capital markets and controls its own business and trading zone, then its currency is going to be the dominant currency in that zone. Everything else is going to be somewhat tied to those two currencies, I think.
And so what about the narrative that, I get that the Bolivar is going to zero quickly, but what about the narrative that the dollar is going to zero slowly? Right? It doesn't, just because it's not obvious that it's going to zero, doesn't mean that the way we're inflating the currency doesn't make it worthless over time.
Yeah, I just don't see it's constructive, right? I mean, I think people they're focused on the wrong thing. The thing the thing to focus on is that gold is dead and you should sell all your gold and buy Bitcoin. The United States government is not dead. The Chinese government is not dead. As much as you dislike saving in the RMB or saving in the euro or using the euro or using the dollar, they're actually quite viable. And in fact, they're getting stronger, right? I mean, you're saying, well, yeah, Venezuela's currency might be diving. No, it might be diving. It's already gone 99% collapse, right?
Mm-hmm.
So if you're asking a practical question in Venezuela, what should you be thinking right now? The answer is you should have a digital wallet with dollars on it and Bitcoin in it.
Mm-hmm.
I say it a different way, right? For example, you could harp on how much you don't like the US dollar to me, but MicroStrategy uses dollars. We sell to, all of our revenues are in dollars, all of our costs are in dollars. We use dollars, right? And so, when will we stop using dollars to do business? Well, not this year, not next year. So a much more practical thing to focus on is, how much working capital do you need in the local currency you do business? And then how much treasury capital do you have? So MicroStrategy had $550 million in capital. We put $50 million into USD. We put $500 million into BTC. And we waited a year. And today we have $5 billion in BTC, $50 million in USD. Okay. So what was constructive? What was constructive was for one person to convert $500 million from USD to BTC. That was easy. What is not constructive? For me to hold my breath and wait for 8 billion people on the planet to stop using dollars. Right? Like that, changing that, telling all my customers to switch and telling all my employees to start taking, that's like a billion times harder than the obvious thing. And I think everybody on earth is the same way, right? Everyone's got a savings account and a checking account. So in your savings account, you should have an asset which will appreciate in value against currencies over time. And that's BTC. Okay, so take all your savings and convert into BTC. And your checking account is a currency that you need to pay for your room and your board and your medical care. And in China, that's not the euro, that's not the dollar, that's not BTC, that's CNY. In Europe, that's EUR, right? Whatever I need to pay my taxes and pay my medical care and pay my day-to-day bills is going to be the local currency. So they're not going away. And in the US, it's going to be USD. Now, in all the weak countries like Afghanistan, it's USD, right? And in Venezuela, you could probably pay bills and they prefer you to be paying USD rather than pay in the Bolivar, right? And in Argentina, they'd rather get paid in USD. I can tell you that for sure, right?
Yep.
Not in the peso. So here's a small idea and here's a big idea. The small idea is I hold 1 month worth of working capital in the local currency, the strongest currency, right? It's not like, do you hate on the dollar? The point is your choice is the dollar or the peso or the Bolivar. Or what's the currency of Afghanistan right now? Is there?
The dollar.
The point is, so instead of hating on the dollar, embrace the dollar. The dollar is the strongest of the currencies with which you can buy and sell things with liquidity. So I think that the idea is I take my working capital, I put it in the strongest currency I can find. That's probably the dollar. I take my savings and I put it in the strongest asset I can find, which is right now Bitcoin. And if you're really smart, you convert all your money into Bitcoin and then you just borrow against the Bitcoin. So instead of having $500 million in Bitcoin and 50 million in cash, why don't you borrow 500 million? You have $1 billion in Bitcoin, 500 million in debt. And now you could fund all of your expenses just by borrowing against the asset forever. And that means that because the portion of your capital, which is working capital sitting in the currency, is not appreciating, it's depreciating, right? You've made that point, right? So if you're a really well-run company, you don't want to carry any working capital, zero working capital, right? You want negative working capital. So you can work out the math. If you have $1 million of capital and you expect Bitcoin to appreciate at 10% a year, as long as your expense ratio is less than 10% per year, you can borrow money forever. If your expense ratio is less than the expected appreciation of the asset you're holding on your treasury, then you can borrow money forever, never sell anything, and get richer while you wait, right?
So question. So the wealthy have been doing this with equities for decades, right? They go to their prime broker, they borrow against their equity, they live off of it, or they buy houses, they buy more stock.
They've been doing it with sports teams too, like the Jets
Exactly.
or the Patriots. They've also been doing it with buildings,
Mhm.
like the Rockefeller Center or any real estate or any land. So they've been doing it with any property forever. They just finance the property and live off of it.
So the question becomes, how do you think this could affect or would affect the average consumer potentially 20 years from now? Meaning, does that become the base asset that everyone holds and then ultimately borrows against to live off of? Or is
You
it?
remember, you remember when people put all their money in their house and their house appreciated, and then what you would do is you would take a home equity
Home
loan.
equity, right?
I mean, this is the equivalent of a home equity loan, but let's come back to property. If I had $1 million in Florida and I bought a house, I would owe the state of Florida $20,000 a year in tax. Okay, so the maintenance cost to carry $1 million of property in Florida is $20,000 for the tax. Then I have to fix the house when it gets rained on. Then I have to replace the roof, right? Then I have to upgrade it. So you could imagine the maintenance cost on the house is like 5%, 50,000 a year. So if you took the same million and you bought Bitcoin with it, your 50,000 a year in maintenance went to zero.
Right.
Okay, where will you see that money come out? It'll come out the other end, Bill. You'll actually probably be getting a plus 5% appreciation, because this is higher form of digital. It's a higher form of property. If I took everything I liked about property, I made it digital, I dematerialized it, and I could get rid of the property tax load and also get rid of the maintenance load on, you know how much it costs to mow your lawn if you have a lot of grass? I live in Florida. I have 2 acres, 3 acres. I have a full-time person, and all he does is maintain the lawn, and he's not alone, multiple people, right? So if you're trying to store money for 100 years as property, you're defeated by the tax and the maintenance obligations. And so you can still do it, by the way. The property goes up in value by a factor of 10, and then you take out your home equity loan. So people have done it, but it would be so much more effective a technique if you did it on a no maintenance cost property, for a bunch of reasons. One is Bitcoin's going to appreciate faster. Bitcoin's going to get taxed less. Bitcoin has lower tax rate. Bitcoin doesn't get destroyed by a hurricane that hits Miami. There's no insurance cost, right, on Bitcoin. And my house in Miami isn't interesting to rich people in Beijing and Moscow and London and Paris.
And
right?
somebody in the comments wrote no eminent domain issue either.
It doesn't get seized.
Right.
Yeah. So if you were starting out, you're like, I think I'm going to basically buy a big house, and then I can live off it. I can reverse mortgage it as I get older. Well, that was your best idea for 30 years, Bill. That was the American dream: own a house and your wealth is in the house. But Bitcoin is so much better idea. So the answer to your question, a long-winded way, is yeah, you should put your discretionary wealth into digital property. You can keep it the rest of your life. And if you're smart, you can live off of either the yield from it or the borrowing or the reverse mortgage against it. And you have every reason to think that property will appreciate in value. One more point I didn't make. People keep making, if you buy a house, if you buy a house in Florida, you're better off to buy the house on 3 acres than you are to buy the condo on the 37th floor of a condominium, because people can punch up more buildings with 100 floors in Miami, but it's hard to create 3 more acres in Miami. So if you are buying property, your property is not scarce, right? Tangible property in the real world is not scarce as much as you wish it was scarce. Apartments with views of Central Park still aren't scarce when they punch up another apartment building next to yours. But Bitcoin is 21 million blocks in cyberspace. So it's a lot better idea than buying a tangible land or buying a condo or buying a house. it's even better than buying a sports team, right? I mean, the people might build some more franchises, or people might get into Twitch gaming online and stop going to football games. So if you're looking for scarce property that's fungible, that's digital, that's low maintenance, that's transferable, that can be developed, well, Bitcoin is that best property in the history of humanity. So everybody should have a property strategy. You should buy property. You should hold it forever. And ultimately, it's a lot better idea to borrow against it than it is to sell it, because when you sell it, you get a capital gains bill, which is going up. We know that's going up a lot, right? We're going to debate how much. When you generate yield on it, you still actually owe tax on the operating income from the yield. So yield is taxable, sales are taxable, borrowings are not taxable. So when I borrow money, if I borrow 5% of my asset value every year for the next 100 years, and if the asset goes up 10% a year for the next 100 years, I'm going to be obscenely rich. And my grandchildren's grandchildren will be obscenely rich, having never incurred a tax bill.
Yep.
And I never could have said that with a straight face about any other investment idea in my life. But this is the first time where really it is quite reasonable to think that in the year 2140, when that last block is mined and the mining network goes to transaction fees, Bitcoin's going to be stronger than ever.
Yep.
And you're only going to regret having sold it. What happens in 500 years when Bitcoin is worth $28 million a coin or 280 million a coin, and you're reading in your family history that your great grandparents sold some to buy a Lambo? You're going to be like, I could have been the richest person in my city. I want to kill them.
Right. Well, they're going to go, what the fuck's a Lambo? Is going to be the first question. And second question is why, what drugs were they on?
Yeah.
Right. So El Salvador / Twitter, kind of interrelated. You saw the news yesterday that Twitter is now going to basically allow, I guess they call it tipping, using the Lightning Network. I assume you saw that?
Yeah.
What'd you think on that?
I mean, they're both bullish. Like El Salvador drags 1 million people in a couple of weeks to set up Bitcoin wallets and Lightning wallets, a great thing, and familiarizes them. And so that's a killer application that drives network adoption.
100%.
And Twitter is another killer application driving network adoption. And I set up that tipping function today. I had to turn it off because I don't really want people's tips, but I set it up. It took me 15 seconds to try it out. 15 seconds. I mean, if you've got Strike loaded on your mobile phone, all you got to do is type in your Strike username and it turns on. It was like magic. So I'm very bullish on that. In general, I think that the thing that people don't get oftentimes is the technical promise of digital energy. If I can actually move digital money or digital energy on Twitter, then why can't I move it on Facebook? And why can't I move it on Google? And there are killer applications. Tipping is a nice application. The killer application is I just post 100,000 Satoshis as a security deposit against good behavior. Like, would you let me move into your home for the summer without posting a security deposit? Probably not. So if you actually just let people post a small cybersecurity deposit, billions and billions of people would all download Lightning wallets, plug it into Google, Facebook, Apple, Amazon, Twitter, Yelp. You ever read a Yelp review or whatever, and you're like, is that a person? You ever read something on YouTube and you think, is that really a person or is it a bot? So I think that the massive mega applications are going to be when tech companies plug Lightning into their mobile app, the Snapchats. I can't read an Instagram DM, Bill, because it's 18,000 bots that all say hi to me, that have 0 followers, that want to be my friend. Okay. I can't read my Twitter DMs other than from people I follow. because it's all spam from bots that would like me to buy yo-yo coin or talk
Right.
about, doofus something or other, and they're not even real people.
Right. Right.
And so we need to clean up cyberspace. And the way to clean up cyberspace is with skin in the game.
Mm-hmm.
And the way to deliver skin in the game is Bitcoin on Lightning rails. And when that comes, hundreds and hundreds of millions of people are going to realize that they need this stuff. And that's going to be a sea change.
Yeah. Fantastic. All right. So I've kept you for 50 minutes. And as always, focusing on getting every word from you is mentally exhausting, but in a good way. So I appreciate that. Thank you very much. By the way, the comments have just been off the charts while we've been talking. So I've integrated some of the questions as I could into the conversation. So you should know that a lot of people have been really interested in what we've been discussing. So thanks for that. Any parting thoughts that you want to share? Anything we didn't talk about?
I think everything that's happening right now is just really bullish for Bitcoin. And I think that that the stuff with Bitcoin and Lightning, if I was an entrepreneur right now, if you were asking me, how do you fix your P&L, or how do you make your product or your service insanely cool? I would be focused upon, plugging Lightning into mobile apps and plugging Lightning into products. And I think that most people haven't really grasped their head around the idea of how I move digital energy at the speed of light, 1,000,000 times a second, and how it fixes Snapchat and fixes YouTube and fixes Yelp and fixes Amazon and fixes Google and fixes WhatsApp and eliminates scammers and spammers and imposters.
100%.
I mean, that is a mega big idea. And you saw a little inkling of it when you saw Strike plug into Twitter. Well, what does that mean? It means like millions and millions of people are going to want to get a Strike account, right? So if you actually create something and you wanted millions or tens of millions or hundreds of millions of people to download your app, plug it into something else to solve a fundamental problem like cybersecurity or communications. And I think that's enormously exciting. And we have scratched the surface, like 0.1% of the opportunity there. A lot. The reason that, like I say, let's stop harping on the dollar versus Bitcoin is people are fixated upon the dollar. And I wish I didn't have to pay taxes, and I just hate the dollar. I hate inflation. And that's not constructive. What's constructive is, oh my, I could pretty much eliminate all scams. I could eliminate all spam. Like that means like this is killer app for Microsoft, right? Everything in my inbox is spam, right? So Bitcoin and Lightning is a killer app for Microsoft, Google, Facebook, Amazon, Apple, Twitter, every mobile company, every internet company. If you're trying to figure out how to grow something or do something, I would be going to school on that, thinking long and hard, because hundreds of billions of dollars, if not trillions of dollars of technology wealth will be created by people that figure out how to plug Bitcoin via, either via protocols like Lightning, or, just go direct as a layer 3 application.
Yep.
Like you guys are doing at Abra, or layer 3 applications like, Square Cash App or something. Although the layer 3s will eventually have the layer 2, the Lightning plugged in the back end of it.
Absolutely.
Right. And
Yep.
we're seeing
So will
that.
we.
So
Yep.
I can't overestimate that. I mean, I can't overemphasize. This is really important, and it's underappreciated. And it's an open green field for anybody that wants to aggressively pursue it.
Yeah. Well, I think we should play back that last part in a year about Apple and Facebook and Google, and come back and see what's changed in a year. Right. I mean, I think people forget it's barely been a year since you guys even started buying. Right. I mean, it's incredible what's happened in the last 18 months. And we haven't really seen kind of the FANG adoption at all. Well, we haven't seen FANG adoption at all. And I think it's coming. And I think it's coming in a big, big way.
Yeah, if you're looking for the key catalyst, right? One catalyst will be The ETFs will be a big catalyst. Another catalyst will be Lightning adoption on the big tech networks and Bitcoin adoption on the big tech networks, but especially via Lightning. The third catalyst would be potentially this accounting thing.
Totally agree. Yeah, big one. Michael, thank you so much. Really awesome to have you with us on Money Talks, and I hope you'll come back on a regular basis and fill us in on what's going on in your world and keep answering our questions. You're a great steward of the Bitcoin community, and we're really lucky to have you. So thank you.
I'm always happy to be here. I'll look forward to the next one.
All right. Thanks, amigo. Take care. All right. Thanks to Michael. Wow. It's always exhausting. Michael, I have a lot of one-on-one conversations, and every time we do, I think I sleep for 12 hours the next day. So he's brilliant, but you have to hang on every word. And so makes it like Charles Cardano from a few weeks ago. He's brilliant guys. You want to hang on every word. But always interesting. And we had some interesting nuggets and things that I hadn't heard him talk about before. I think the accounting thing might be a little boring for some of you, but don't underestimate its importance. Just to kind of summarize that point, if you basically hold Bitcoin on your balance sheet as a company, you have to show the losses, but you can't show the gains, right? And so, and that's my kind of a layman's explanation. And we actually hold Bitcoin on our balance sheet at Abra. We're, still a relatively small company compared to MicroStrategy, but it's a huge part of our balance sheet. And as a private company, the issue is less important, but it's going to become a big issue if the Accounting Standards Board doesn't address this issue. And I think they will. It's just common sense. Okay, so normally we get into charts and some other things. I'll take 2 minutes and fill you all in on what's going on. I know many of you just joined from Michael, but I'm gonna give you a little screen share here to talk about crypto prices. So we'll go to the Bitcoin chart right now. Let me reload this. Okay, so luckily we bounced a little bit off some lows. We obviously tanked on the China news, the re-news, I don't know what you want to call it, but of basically, China banning Bitcoin for the umpteenth time. I'm not going to say it's bullish or bearish. It just is. Look, I mean, we've had all these things coming at us in the Bitcoin world for the last 6 months. China banning mining, Elon's FUD, this new ban, Congress and the SEC talking about crypto, and yet Bitcoin is at 42,000. Ethereum's is hovering right around 3,000. I think we're at 2,900 right now. So look, this is not a technical analysis show, as I always say, but the fact that we're not down here, I should say really, down here in the doldrums. Is actually pretty cool, and to me shows a lot of resilience. And the on-chain kind of fundamentals show a much more bullish story even than what we're seeing right now. I mean, I'll go back to the daily here for a second, make it easier to read, and let me zoom out a little bit to make it easier. Right, so we've recovered. See the red chart, the red bar has actually gone up from its lows of about 40,700 up to about 42,300. But more importantly, this rubber band seems to be winding up here and looking for a dramatic move higher. And the on-chain analysis basically says large holders, steady hands continue to accumulate Bitcoin and Ethereum at a very healthy clip. And the on-chain analysis is bullish. No denying that this week's price action is bearish. And the two are in conflict, and price wins in the short term. But in the long term, as we say in plumbing, water seeks its level. And right now that level seems to be in the high 50s at a minimum. So I think a breakout is coming. I could be wrong. We could even test, 30,000 before then. I don't think so, but it's possible. I think the lows are in now. We'll see what happens. I'm not a technical analyst. I just buy and hold, like I hope you all do as well. Okay, so I'm exhausted. You're probably tired of listening. And this was an awesome show. Thank you again to Michael Saylor for joining us. And I will stop the share here. Thanks to our producer for doing a great job today. And as always, stay safe, stay healthy, and we will see you next week on Money Talks. Thanks, everyone. Take care.